What to expect for 2025. Chapter 1. The economic fallout of 2024. As 2024 draws to a close, we witness a year where the world's economies were caught in the crossfire of inflation, rising interest rates, and geopolitical instability. Central banks across the globe, from the U.S. Federal Reserve to the European Central Bank, adopted aggressive tightening policies to curb inflation, raising interest rates to levels not seen in over a decade. This has, in turn, slowed economic growth as businesses face higher borrowing costs and consumers reduce spending. Major sectors, particularly in energy, technology, and manufacturing, are feeling the squeeze, leading to waves of layoffs and scaling back of investment projects. The impact of these monetary policies extends beyond businesses, directly affecting households. With inflation remaining stubborn, the cost of living has risen considerably, outpacing wage growth in many countries. Housing markets have seen a sharp correction as mortgage rates climb, leaving potential buyers priced out while homeowners face higher payments. Consumer confidence has waned, with many opting to save rather than spend, exacerbating the slowdown. These conditions set the stage for a challenging 2025, where stagnation may define economic performance across key markets. On a global scale, the interconnectedness of economies has revealed vulnerabilities. Supply chains, still recovering from pandemic-era disruptions, have struggled to adapt to new geopolitical pressures. Trade tensions, especially between the U.S. and China, have impacted global commerce, with nations reconsidering their alliances and trade dependencies. These dynamics are reshaping globalization as we know it, and in 2025, the economic fallout will likely become even more apparent, leading to a more fragmented global marketplace. Chapter 2. The stock market, bull or bear. The stock market in 2024 was marked by extreme volatility. Investors grappled with fluctuating interest rates, inflation fears, and political instability. Major indices like the S&P 500 and NASDAQ experienced wild swings, reflecting the uncertainty in the broader economy. As 2025 approaches, one of the key questions on investors' minds is whether we're entering a prolonged bear market or if conditions will improve to spark a new bull run. One major factor influencing the markets is the monetary policy of central banks. With high interest rates, growth stocks, particularly in tech and emerging industries, have underperformed. Investors have rotated into safer assets such as bonds and dividend-paying stocks, seeking stability amidst the turmoil. However, should inflation recede and central banks signal a more accommodative stance, we could see renewed investor optimism and a resurgence in riskier assets. Much will depend on inflation data, unemployment trends, and corporate earnings in the first half of 2025. Beyond the macroeconomic factors, geopolitical risks loom large. The ongoing war in Ukraine, rising tensions between the U.S. and China, and instability in the Middle East have all added a layer of uncertainty. These events, alongside increasing regulations on industries like tech and finance, could dampen investor sentiment further. For those looking to navigate the stock market in 2025, the key will be diversification, a focus on value stocks, and paying close attention to global political developments. Chapter 3. The real estate market, boom or bust. Real estate markets around the world have been cooling off since mid-2023, a result of high interest rates, inflationary pressures, and the declining affordability of homes. In places like the US, the UK, and Australia, homebuyers have been hit hard by mortgage rate hikes, making it more difficult for first-time buyers to enter the market and for existing homeowners to refinance. As we head into 2025, the question remains, will the housing market experience a further downturn, or are we looking at a potential rebound? The high cost of borrowing has forced many would-be buyers to sit on the sidelines, while investors in the real estate sector face declining rental yields. With central banks unlikely to significantly lower rates in the short term, the affordability crisis may deepen, putting downward pressure on home prices. In some regions, we could see housing corrections as much as 10 to 15%, particularly in overvalued urban centers, where the real estate boom was most pronounced in previous years. On the flip side, some investors see opportunity amidst the downturn. Institutional buyers, including real estate investment trusts, REITs, have been purchasing distressed properties at lower prices, banking on a long-term recovery. Furthermore, the growing demand for affordable housing, especially in suburban and rural areas, could drive development in regions previously overlooked. For 2025, the real estate market is expected to be highly segmented, with significant opportunities for those willing to take calculated risks, particularly in areas with strong employment growth and infrastructure development. Chapter 4: Energy Markets, a New Era of Transition. The energy landscape in 2025 will be defined by a transition toward renewable sources amidst ongoing geopolitical tensions. In 2024, energy markets were severely impacted by the war in Ukraine, leading to supply chain disruptions, particularly in natural gas and oil exports. Europe, in particular, faced an energy crisis as it worked to reduce its dependence on Russian gas. This disruption accelerated efforts to invest in renewable energy sources, a trend likely to dominate the narrative for 2025. As countries race to meet climate targets and reduce their reliance on fossil fuels, investments in solar, wind, and nuclear energy are surging. In 2025, we can expect governments to continue to push for cleaner energy initiatives, with significant funding going toward research and development of next-generation technologies. However, transitioning to a low-carbon economy is not without its challenges. The intermittent nature of renewable energy sources and the need for advanced energy storage solutions are ongoing issues, which could lead to short-term volatility in energy prices. The energy sector is also grappling with the reality of underinvestment in oil and gas infrastructure. While the world pushes toward a greener future, demand for oil and gas remains significant, especially in developing nations. This imbalance between supply and demand could lead to price shocks, especially if geopolitical tensions escalate. For 2025, energy markets will likely remain volatile, with a delicate balance between advancing renewable energy efforts and maintaining sufficient fossil fuel supply to meet global demands. Chapter 5: Inflation and Interest Rates. The New Normal? As we move into 2025, inflation remains one of the most pressing concerns for both consumers and policymakers. The efforts to control inflation through aggressive interest rate hikes in 2024 have succeeded in some regions, but the global picture remains uneven. Countries with weaker currencies and those more reliant on imports, particularly in energy, have continued to experience high inflation rates. Central banks are now grappling with the challenge of balancing inflation control without stifling economic growth. Interest rates, which have been historically low for much of the past decade, are expected to stay elevated throughout 2025. Central banks are cautious about cutting rates too quickly, fearing a resurgence of inflation. The higher borrowing costs are likely to weigh on both consumer spending and business investment, creating a more cautious economic environment. In particular, sectors such as housing, retail, and construction, which rely heavily on affordable credit, will feel the pinch the most. Despite these challenges, inflationary pressures may ease slightly by mid-2025 as supply chains continue to stabilize and global trade tensions relax. However, inflation is unlikely to return to pre-pandemic levels anytime soon. A new normal of moderately higher inflation, paired with cautious monetary policy, will likely shape the economic landscape. Consumers and businesses will need to adjust to this reality, making strategic choices to navigate an era where price stability is not guaranteed. Chapter 6: The Job Market, Remote Work, AI, and Automation. The labor market has undergone significant shifts since the pandemic, and 2025 is poised to continue this evolution. Remote work, which became mainstream in 2020, has permanently altered the way businesses operate. Hybrid work models, where employees split their time between the office and home, have become the standard in many industries. However, as companies adapt to this model, they are also investing heavily in automation and artificial intelligence, AI, to streamline operations and reduce labor costs. AI's role in the workforce is growing rapidly, particularly in sectors like manufacturing, finance, and customer service. Jobs that were once secure are now at risk of being replaced by machines, a trend that is expected to accelerate in 2025. For workers, this means a shift toward higher skill roles that require creativity, problem solving, and emotional intelligence, areas where machines cannot easily compete. Upskilling and reskilling will be crucial for those wanting to remain competitive in the job market. While automation may lead to job displacement in some areas, it also creates new opportunities in fields like AI development, cybersecurity, and data analysis. The challenge for policymakers will be to support workers through this transition, ensuring that educational systems and labor regulations adapt to the changing nature of work. 2025 could mark a turning point in how we think about employment, with more emphasis on flexibility, lifelong learning, and collaboration between humans and machines. Chapter 7: Cryptocurrency, Evolution or Decline. Cryptocurrency markets have been on a roller coaster ride over the past few years, with massive price swings and regulatory scrutiny casting doubt on their long-term viability. In 2024, many governments took steps to regulate the crypto space, aiming to protect consumers while ensuring that digital currencies do not destabilize financial systems. These regulatory moves have dampened some of the speculative fervor, but they've also provided a framework for legitimizing cryptocurrency as a financial asset. Heading into 2025, the crypto landscape is evolving. Bitcoin and Ethereum, the two largest cryptocurrencies by market cap, remain dominant players, but they are no longer the only games in town. Central bank digital currencies, CBDCs, are being developed by many nations, and these government-backed digital assets could challenge the decentralized nature of traditional cryptocurrencies. Countries like China have already rolled out their digital yuan, and more nations are expected to follow suit in 2025. Despite this evolution, the volatility of cryptocurrencies is likely to persist. Investors will continue to grapple with price swings driven by market sentiment, regulatory news, and technological developments. The future of cryptocurrency will depend on whether it can transition from a speculative asset to a stable medium of exchange. 2025 will be a pivotal year for the industry, as it navigates both regulatory pressures and the challenge of gaining mainstream adoption. Chapter 8: The Rise of Green Finance. Environmental, social, and governance (ESG) investing has gained considerable momentum over the past decade, and 2025 is expected to see even more capital flowing into green finance. Investors are increasingly seeking out opportunities that align with their values, focusing on companies that prioritize sustainability, ethical labor practices, and good corporate governance. This trend has been driven by both institutional investors and individual consumers who are becoming more conscious of the environmental impact of their investments. Green bonds, which are used to finance projects that have positive environmental benefits, are becoming a popular asset class. Governments and corporations alike are issuing green bonds to fund renewable energy projects, clean transportation, and sustainable agriculture. In 2025, we can expect this market to continue growing as more investors prioritize sustainability and as governments increase pressure on businesses to meet climate goals. However, the rise of green finance also comes with challenges. There are concerns about greenwashing, where companies overstate their environmental credentials to attract investment. In response, stricter regulations and transparency requirements are being introduced to ensure that investments truly meet ESG criteria. For 2025, the focus will be on ensuring that green finance delivers real-world impact, with investors demanding more accountability from the companies and funds they invest in. Chapter 9: Geopolitics and Global Trade. The geopolitical landscape in 2025 is characterized by ongoing tensions between major world powers, particularly the United States, China, and Russia. These tensions have led to a fragmentation of global trade as nations reconsider their alliances and seek to reduce dependence on rivals. The US-China trade war, which has simmered for years, continues to create uncertainty for businesses that rely on global supply chains. Many multinational corporations are now diversifying their operations, seeking alternative manufacturing hubs in Southeast Asia, India, and Latin America. Sanctions and tariffs have become tools of geopolitical influence, disrupting traditional trade routes and supply chains. For businesses, this means higher costs and increased uncertainty as they navigate a more complex global trading environment. Companies that are agile and able to adapt their supply chains will have a competitive advantage in 2025, while those that are slow to react may struggle to remain profitable. In addition to trade disruptions, geopolitical tensions are affecting energy markets, technology development, and foreign investment flows. As nations prioritize security over economic efficiency, we are seeing the rise of protectionism and the breakdown of multilateral trade agreements. In 2025, businesses will need to carefully monitor geopolitical developments and build resilience into their operations to mitigate the risks posed by an increasingly fragmented world. Chapter 10: Global Supply Chains, Adaptation and Resilience. The global supply chain disruptions that started in the pandemic era continue to evolve in 2024, exacerbated by geopolitical tensions and regional conflicts. As we move into 2025, businesses are increasingly focused on building resilience into their supply chains to mitigate risks and ensure operational continuity. The just-in-time model, which prioritized efficiency and cost-cutting, has proven vulnerable to disruptions. In response, companies are shifting toward a just-in-case approach, focusing on inventory buffers, diversification of suppliers, and regionalization of manufacturing. Regionalization is particularly prominent in 2025. Instead of relying heavily on manufacturing hubs in China, companies are turning to nearby regions such as Southeast Asia, Latin America, and Eastern Europe to distribute production more evenly across the globe. The US and European Union have also increased investments in local manufacturing to reduce dependence on foreign production, particularly for critical goods such as semiconductors, pharmaceuticals, and energy technologies. Technological advancements are playing a key role in this transformation. Artificial intelligence, blockchain, and advanced data analytics are enabling companies to track shipments in real time, predict disruptions, and automate decision-making processes. These innovations are critical for businesses looking to improve their supply chain visibility and resilience. In 2025, the companies that embrace these technologies and adapt their supply chains will have a competitive edge in a world where volatility has become the new normal. Chapter 11: Consumer Behavior, Shifts in Spending and Saving. Consumer behavior is undergoing profound changes as people adapt to economic uncertainty, inflationary pressures, and changing social norms. In 2024, consumers were more cautious with their spending, focusing on essentials and reducing discretionary purchases as the cost of living increased. This trend is expected to continue into 2025, with consumers prioritizing savings and financial security over luxury goods and experiences. The rise of e-commerce, accelerated by the pandemic, shows no signs of slowing down. In fact, online shopping has become the default for many consumers, and businesses that have not yet fully embraced digital platforms may find themselves falling behind. However, consumers are also more discerning than ever, expecting transparency, sustainability, and value from the brands they support. This has given rise to the conscious consumer, who is willing to pay a premium for products that align with their values, particularly in areas like sustainability, ethical sourcing, and fair labor practices. Additionally, the generational divide in consumer behavior is becoming more pronounced. Millennials and Gen Z, who came of age during economic crises, tend to be more frugal and focused on long-term financial goals, such as homeownership and retirement savings. In contrast, older generations, who may have more disposable income, continue to prioritize travel, dining, and entertainment. Understanding these demographic shifts will be key for businesses in 2025, as they tailor their marketing strategies and product offerings to meet the evolving needs of a diverse consumer base. Chapter 12: Technological Innovation. AI, blockchain, and beyond technology will continue to be a major driving force in the global economy in 2025. Innovations in artificial intelligence, blockchain, quantum computing, and 5G technology are transforming industries at an unprecedented pace. AI, in particular, is expected to play an even larger role in the workplace, with advancements in machine learning, natural language processing, and robotics reshaping sectors from healthcare to finance. In finance, AI-powered algorithms are being used to detect fraud, assess credit risk, and automate trading. As these technologies improve, they are expected to reduce operational costs and increase the efficiency of financial institutions. Blockchain technology is also gaining traction, particularly in supply chain management and decentralized finance, DeFi, where it offers increased security, transparency, and efficiency. Companies that adopt these technologies early will be better positioned to capitalize on the opportunities they present. Quantum computing, though still in its early stages, has the potential to revolutionize industries by solving complex problems that are currently beyond the capabilities of classical computers. This could have far-reaching implications for fields such as cryptography, drug discovery, and logistics. As these technologies mature in 2025, businesses will need to stay at the forefront of innovation, investing in research and development to remain competitive in a rapidly changing technological landscape. Chapter 13: Sustainability and Corporate Responsibility. As environmental concerns continue to grow, 2025 will see an even greater emphasis on sustainability and corporate responsibility. Consumers, investors, and regulators alike are demanding that companies take meaningful action to reduce their carbon footprints, protect natural resources, and promote ethical business practices. In response, businesses are implementing sustainability initiatives across their operations, from reducing waste and emissions to improving labor practices and fostering diversity and inclusion in the workplace. One of the key drivers of this shift is the increasing pressure from regulators, particularly in Europe and North America. Governments are introducing stricter environmental regulations, carbon pricing mechanisms, and reporting requirements, forcing companies to take sustainability seriously. In 2025, companies that fail to meet these standards may face significant financial penalties, reputational damage, and loss of market share. At the same time, sustainability presents new business opportunities. The green economy is growing rapidly, with industries such as renewable energy, electric vehicles, and sustainable agriculture attracting billions of dollars in investment. Companies that position themselves as leaders in sustainability will not only meet the expectations of their stakeholders, but also unlock new revenue streams in emerging markets. As we move into 2025, sustainability is no longer a buzzword, it is a business imperative. Chapter 14: The Future of Globalization, Fragmentation or Cooperation. Globalization, once viewed as an unstoppable force, has faced significant challenges in recent years. Trade wars, supply chain disruptions, and rising nationalism have all contributed to a shift toward economic fragmentation, with countries prioritizing domestic industries and reducing reliance on international trade. In 2025, the future of globalization remains uncertain, as nations grapple with the question of whether to cooperate or retreat into protectionism. On the one hand, there are signs that regional trade blocs are strengthening. In Asia, for example, countries are deepening their economic ties through agreements such as the Regional Comprehensive Economic Partnership, RCP, which aims to create the world's largest trading bloc. Similarly, the European Union is pushing for greater integration among its member states, particularly in areas such as energy and digital markets. These regional alliances could help buffer against the risks of global economic fragmentation. On the other hand, tensions between major powers, particularly the US and China, continue to pose a threat to global cooperation. As these nations pursue economic decoupling and trade restrictions, businesses are being forced to adapt to a more fractured global market. The outcome of this geopolitical competition will have profound implications for global trade, investment flows, and the future of globalization itself. In 2025, the world will continue to walk a fine line between cooperation and competition.